Welcome to Trends with Benefits, an award-winning podcast by Van Eck with a forward-looking perspective. We explore new ways of thinking about the markets, work, and life. Here's your host, Ed Lopez.
So I wanted to take a look at the gaming industry today, its current state of affairs and its current outlook. And here's part of the backdrop. Hopefully we're getting past COVID and the worst of COVID. And I sense that because I walk around New York City and I see a bunch of people in the city walking around. So travel is back, or definitely coming back. Then there's sports betting, which seems to be catching fire all across the country, state by state. New York recently legalized sports betting in the state. And when you look at a broad index of global gaming stocks, the Envis Global Gaming Index is down over 30% over the last 1 year. So kind of compare that to the broad market like the S&P 500, which is down more like 10% over the last year or so. And we're recording this in early May. So, the question starts to percolate, even though the market has been somewhat sputtering a bit to start this year with the prospects of rising interest rates, the Fed cutting back on some of the liquidity support, and of course, geopolitical tensions. As we hopefully come out of all of this volatility, will there be opportunities for investors in the broader gaming market? And so I wanted to bring somebody that had a perspective of the global gaming market kind of from the inside. And so I'd like to welcome David Forman with the American Gaming Association. He's Vice President of Research. He leads the AGA's research efforts and partnerships across the full spectrum of issues affecting the gaming industry. So David, thanks for joining me.
Hey, thanks for having me.
As I mentioned, I wanted to catch up on the latest outlook of the industry. And you guys recently posted a blog about the current state of affairs and the outlook that you guys see. Maybe just to kind of level set for us, and then we'll get into all the background mechanics of your latest blog. But kind of in a nutshell, how would you characterize the state of the gaming industry and the current outlook?
I think, as you said, last fall, we released the first issue of what we call our gaming industry outlook, which the idea is to kind of look at where we are now and then look at where we think the industry is going to go over the next 1 to 2 quarters. And really, the biggest component of that, the most interesting component of that, is a survey that we conduct of our member CEOs to get their sense of how they view their businesses over the next 6 months. We just released the second iteration of that last week, late April, depending on when this comes out. And, it was an interesting difference compared to the first one last fall. More CEOs compared to last fall think that the current situation is good. That's probably not surprising, right? Were till very recently in a better position, at least related to things like COVID, than we were last fall. So more CEOs think the situation is good right now. About 2/3 of them describe it as good. None describe the current situation as bad. That's up from about 54% last year. But when you look forward, it gets a little softer. 42% think that the future business situation is going to continue to improve, but 13% think it's going to worsen. So it was a net positive of 29% in having a positive view of the future business situation. That's down from about 40% in the third quarter of last year. So again, people think the current situation is pretty great. They're still pretty bullish on the future, but they don't think that it's necessarily going to improve at a rate that it's been doing really since COVID. It's been kind of an unprecedented growth for the industry since, the reopening after COVID. And that rate of growth just can't continue. It's not, you can't grow at that rate forever. So I think you're seeing that reflected a bit in the CEO's sentiment. I think on the supplier side of things, the guys who make the slot machines, they actually were a lot more bullish than we saw them last fall. Earlier this year, in March, when we conducted the survey, almost all of them said that they expected sales of gaming machines to increase, right? Both new units and replacement units. So that was up a lot from last fall. And I think that is kind of reflective of how well the operators are doing, right? The operators are doing well. I think a lot of them have had earnings in the last day or two, and they've been pretty positive. And as their business does well, they're able to take that money and reinvest it in their gaming floors, and that helps the gaming suppliers, and that shows up in their sales, and you see it in the optimism that they reflected in the survey. I think the outlook is great. We just wrapped up the first quarter, or at least regulators just wrapped up reporting first quarter gaming numbers. It was the best first quarter for the commercial gaming industry ever. It was just shy of the all-time quarterly record for gaming revenue, which we set in the fourth quarter of last year. Every vertical had really strong growth from both 2019 and 2021. And March, we were starting to get into tougher comparisons year over year. Finally, in March, people were kind of worried how those would stack up, but March was the industry's best month ever. So between the CEO outlook and the consumer spending, I think it's a really strong positive outlook for the industry.
And maybe taking a step back, the American Gaming Association, what types of companies make up your membership?
Yeah, we represent basically the entirety of the U.S. gaming industry. We have the commercial and the tribal operators of casinos, right? Like MGM or Wynn, Hard Rock on the tribal side. Then we have the gaming suppliers, the guys who manufacture a lot of the games you see on the floor, IGT, Aristocrat, Konami, for example, and then a lot of the big sports betting names like DraftKings and FanDuel. So really represent the breadth of the U.S. gaming industry.
And maybe talk a little bit about your role in the organization and maybe how you interface with some of these operators or some of these members.
Yeah, so I run our research offering at the AGA, and I think it's split a couple of different ways, right? We do a lot of stuff that is kind of for public consumption on the advocacy side and promoting the industry, right? A lot of the things we just talked about, like tracking industry revenue and executive sentiment around the future and trying to convey the strength of the industry, like what we're doing right now. And then we do a lot of things that are for members, right, to help them understand the public mood, how the public thinks about the industry, how policymakers think about the industry, to help them in a public affairs sense. And then the final leg is doing a little bit of consumer research for the industry to help them understand how consumers think about things like technology on the casino floor or digital payments on the casino floor, which is rolling out more and more now. So kind of doing things where we're able to leverage the membership kind of collectively and do things maybe more effectively or more efficiently than individual companies could do on their own.
The piece that you guys put out, I think late April or so, identified the current market conditions and then a future state index, future conditions index. And it sounds like, how is that created? Is that survey based, and what types of things are you asking of the CEOs of those companies?
Yeah, so the future index is largely driven by the CEO survey that we do. It also incorporates forward-looking economic data from Oxford Economics, who's our partner in constructing it. So it's split between those two things, but it is heavily weighted towards the CEO outlook. And so we got really good participation. About 70% of our member CEOs have participated in both iterations. So, I know that they find value in it themselves, but I think they also get a lot of value out of using it to promote where we're going as an industry.
And what are you hearing generally from these CEOs and from your members in terms of the issues that are top of mind for them?
It was an interesting shift actually since the fall. I mean, supply chain delays remain the by far the biggest concern. 3/4 of the CEOs said that supply chain delays are limiting their operations. That was up a little bit from the fall. Interest rates.
Is that like delivery of new slot machines or new equipment, or?
Yep, I think it flows through, right? So suppliers aren't able to get chips or components to manufacture their slot machines, so it backs up on their end, and then operators, obviously, when they order the machine, aren't able to get them from the suppliers in a super timely fashion. I was actually in Las Vegas last week, and I was visiting with a supplier member, and they gave me a tour of their kind of show floor, and it was half empty because they have so few machines on hand that they're shipping machines to trade shows to show people. So they're cannibalizing their show floor at the headquarters because there's a shortage of machines, and it's kind of impacting them at that level. It was sort of a hands-on experience in the supply chain issues there. It really is a big problem for them.
And are they also suffering from the labor shortages that a lot of industries are dealing with?
Yeah, after the supply chain, inflation was the second. Inflation and interest rate concerns were the second biggest. Labor was the third biggest concern. That was actually down a little bit from the fall, so that seems to be becoming becoming a little bit less of an issue. But inflation, wage increases, it's all kind of tied together, right? A lot of them, an overwhelming majority of them, thought that the pace of wage increases would continue to increase over the next few months. And maybe not surprisingly, fewer people expect the pace of hiring to increase. Most of them still expect to keep hiring because they need people, but as the pace of wage increases keep going up, the pace of hiring might start slowing down a little bit.
What other types of investments are operators planning or investing for going forward?
Well, a lot of them are updating their gaming floors, right? Like we talked about, as people come back and operators have more money to spend, they're investing that money in buying machines for the floor. They're hiring, and they're spending a lot of money on to attract and retain employees. But outside of those things, and in terms of capital expenditures, the hotel is the biggest area where people say that they're gonna aim their capital spending over the short term. More than half of the CEOs we talked to of operators said that they expect to see greater than normal investment in their hotel operations over the rest of the year.
So that's interesting. So, I mean, I think they're definitely investing for the expectation of people coming back, traveling again, being comfortable doing that. Do they look at online gaming as, I guess, complementary or as potentially cannibalizing?
That's probably one of the hottest controversies out there. I think a lot there's a camp that argues it's cannibalizing, but I think most people view it as complementary. Right, it's another way to interact with your guests. Right, they can't come to the casino every day, but if you can interact with them at home or some other way, it's a complementary offering. Right, a lot of it launched and it really took off during COVID. So a lot of it's difficult to say how much of the increase in iGaming is because people aren't going to the casino anymore, and how much of it is because of COVID, and how much of it is kind of structural. But I think for most people in the industry view it as a complementary offering, which is why I think there's so much excitement over it.
Yeah, I would think so. I'd probably game a lot more or do a lot more betting if I had it right on my phone as opposed to a yearly trip to Vegas.
Yeah, I mean, sports betting gets all the attention. It's obviously really high profile. It's everywhere you go. But iGaming generated $3.7 billion last year, and it was in just 6 states. Sports betting only did a little bit more than that in about 30 states. iGaming is a lot higher margin. It's a much bigger potential growth area for the industry. It's tougher to roll out, right? I mean, only one state passed it last year, Connecticut. And there hasn't been much movement this year, but in the long term, iGaming is a big growth area.
So I've seen reports or trackers, so like websites that track sports betting legalization across the states. Do you have any stats like that on iGaming? Like how many states have legislation on the books maybe that are looking at it, anything like that?
There's 7 states with iGaming right now. One of them, Nevada, only has poker, and they don't break out revenue from online poker. So really there's 6 states. 6 states with iGaming, and they generated almost as much revenue as 30 plus states with sports betting. But it's a tougher ask of state legislators. Concerns about responsible gaming. There's concerns from local stakeholders about the cannibalization that we just talked about. So there has been some movement. Connecticut legalized it last year. Michigan legalized it the year before. So states are slowly coming online, and more states are considering it. But I don't think we're that close to seeing any pass anything this year.
So, and as we mentioned, there's more sports betting, I guess, that has been adopted or legalized. How would you characterize the importance of sports betting to the gaming industry? And how is that going for the industry itself and perhaps for the states that are allowing it?
Well, I mean, it's off to a tremendous start. I mean, a few years ago it was only legal in Nevada, and now we're at, I believe, at least 33 states had sports betting revenue of over $1.5 billion just in the first quarter of this year. It's important and it's off to a big start, but to put it in perspective, despite all the big numbers, last year sports betting represented less than 10% of commercial gaming revenue. It's relatively low margin. The house can lose, right? Unlike blackjack or roulette, where ultimately, mathematically, the house is going to be guaranteed to win. That's not necessarily the case with sports betting. So it's a low margin business. It used to be, in Las Vegas, it used to just be an amenity. It was something that casinos offered most of the time at the casinos in Las Vegas. The sports book was owned by a completely separate company from the casino itself. Now it's a way for casino operators to reach players like iGaming in more ways when they're not at the casino property and to engage them all the time. It's important from a revenue perspective, but it's also really important from an engagement, a brand engagement perspective.
Yeah. And now you got the sports leagues involved here too. Now they can be involved with the sports books, right?
Yeah, I think the really interesting thing about sports betting is how it's bringing leagues and companies and entities that weren't previously engaged in sports betting kind of into the fold. And the leagues are interesting because not only were they not involved, but they were vociferously opposed to it for so long, talking about how it would have a negative impact on the game, and that's changed quickly. But yeah, the leagues are involved. Media companies are getting involved now, and even beyond the leagues and media companies, you see people like Fanatics, right? An apparel company, or they were an apparel company. Now they're an apparel company and a trading card company, potentially soon a sports betting company getting involved. So, right, sports betting is a great way to reach people and build engagement with consumers. And so you're seeing the leagues do it because it helps them. Obviously, if you're watching a blowout game, you're going to watch it longer. It might be a 20-point game, but if the spread is 15 and you have $10 on it, you turn it off. If you didn't have any money on it, but you have a few bucks, you might keep watching it. So that's going to help the ratings. That's going to help engagement. You're more likely to watch media related to the league. You're more likely to follow players on social media. You're more likely to interact with them all over the place because of it. So they're getting involved. Media companies are getting involved because, again, it makes you more likely to consume more media related to it. And then other companies like Fanatics see all kinds of other angles where they can use it to help promote their other products.
Yeah. So you mentioned some of the types of research that you did. You mentioned some research on consumers, and I don't mean to put you on the spot, but I'd be curious to hear if you have any thoughts in terms of findings or trends within consumers and what consumers are demanding, or what you have seen in that regard.
Well, in terms of sports betting, I think one of the biggest reasons that we talk about in terms of legalizing it and why it should be legalized is because people are doing it anyway. People have been betting on sports forever. They've just been doing it illegally with the bookie down on the corner or with one of these offshore sites. And we did a study, I think 2 years ago now, looking at whether people were moving from the illegal market to the legal market or not, and why or why not. What was stopping them. And so we asked them where they were placing their bets, gave them a huge list of sites to look at. And, more than half were still betting, at least in part, with offshore illegal books. And when we, prompted them and said, did you know a lot of the sites you're using are unregulated or illegal? Did you know that? A very large majority, I can't remember the number, a very large majority said they were surprised to learn that they were betting illegally. They also said it was important that they bet for themselves, that they bet legally. So that was surprising, that so many people were just unaware of what's legal and what's illegal. Again, I don't remember the number, but a really surprising number of people even believe that betting with their corner bookie is legal. So I think, with the spread of legal betting, I think it's just important to reach consumers and as they learn who the legal operators are, education is just a really big part of moving them from the illegal market to the legal market. And that was, I think, a pretty surprising finding.
And to go back to the casino floors and the hotel operators again, and my angle here is trying to figure out if there are potential investments in some of the suppliers. So the question is kind of going back to what we talked about a little bit in terms of how some of the operators are planning for the future, what types of investment. You talked about tech on the floor, digital payments. I wonder if you can elaborate on any of those particular trends.
Well, digital payments is I think a big area of growth for the industry. I mean, for a very long time, casinos, we always talk about casinos and flea markets being, and yard sales being really the only cash businesses left in America. And it's a little antiquated, right? You go to the casino and you have to either take cash out before you go or go to the ATM at the casino, and it can be frustrating, and so why can't the casino floor operate like every other business in America, or like a cruise ship, or like Disney, where you can tie your kind of personal account to your key card for your room or a wristband? And so a first step to doing that is just being able to deposit money into an account or buy credits at a slot machine or chips at a table with, a debit card. or another form of digital payment, right, with Apple Pay on your phone. And so we're seeing those systems slowly being rolled out at a few casinos, at least one on the Strip, and then a couple more across the country, to allow consumers to more easily directly deposit money to use on the floor without having to get up and go to an ATM and pay the ATM fees. And people hear that and they say, well, there's huge responsible gaming problems with that, right? That's going to encourage people to really overspend. But actually, it provides a lot more potential responsible gaming support areas for them, right? You're able to set time limits when you do that. You're able to set deposit limits. You're able to track how much you're spending. So you're able to set all these limits up front so that when you hit them, you can kind of automatically stop yourself or be stopped. So this helps ease the friction for consumers, but it also helps protect them in a lot of ways.
Since you mentioned responsible gaming, one of the big topics in the financial industry is ESG. You familiar with that acronym?
I am.
And I'm kind of curious if your membership is being affected by that and what considerations they're making with regards to, I guess, responsible gaming or other ESG considerations they might be thinking about.
So we had our board meeting a week or two ago, and we had somebody from a ratings agency there, and he was saying that at least one ratings agency is now incorporating an ESG score for individual industries into their thinking when they're assigning credit ratings to companies in those industries. So it's more than just sort of a tick the box thing, right? It does actually impact their business. And I think for gaming, as you mentioned, the most relevant ESG thing is probably responsible gaming. And the industry is committed to it. I mean, the industry is very committed to making sure that we have a sustainable relationship with consumers. And I think it's actually really paid off over the last few years. The number of, when we talk to Americans, we do our survey of Americans every year to ask them how they feel about the gaming industry. The number of Americans who say that the industry is committed to responsible gaming has increased almost 40% since 2018. 3/4 of past year gamblers say they're aware of at least one industry provided RG resource. So the industry puts a lot of time and money into it, and the message is getting out there. We spend a lot of time trying to reach consumers and get the message out to them, and they're hearing it. So I think that's really where the industry's focused on ESG, and I think it's reaching the right audience.
Yeah, it's such a muddy water kind of situation with ESG and how one defines it or how one investor defines it. And some you could be very exclusionary and just check the box and say, all right, no gaming, no ammunition, and anything like that. Or you can take a little bit more time or a more evaluation and consider what each of the companies are doing in each of those ESG buckets. In terms of the excitement in a lot of different areas, what do you think is a bigger factor, technology or the period of easy money that we've had over the last decade or so?
I think technology. I mean, there's a big overlap between casino gamblers and tech early adopters. Probably not a surprise. People who are willing to buy the first pair of Google glasses are probably risk takers in some regard. And so, I think it's interesting. There was a debate a few years ago that the industry was falling behind in terms of technology, and that it was seen by people to be outdated. People saw the casino floor as outdated, and there was a real push to add things like skill-based games were kind of a hot topic for a while, where people wanted interactive games where you could play against somebody else, and it was ostensibly based on skill. That never really caught on, but I think if you walk the casino floor today, the technology in the slot machines is really cool. It's really engaging. We were at our trade show last year, and there's slot machines with a canopy, right? It goes all the way over your head, and there's somebody sitting behind you and hit a jackpot, and it's almost an immersive experience. So I think those worries were kind of overblown, and people are attracted, especially younger people, and people who might be willing to take risks, right? Who are into technologies, who are into cryptocurrencies, are attracted to a casino floor for the same reason they're willing to take a chance on Dogecoin or Google Glass.
So what's one long-term trend you see playing out over the next year or several years?
I think the entrance of non-gaming companies into the gaming space is going to be really interesting. We've already seen it a little bit, right? Penn National Gaming bought Barstool. They've integrated essentially a media company and made it their sportsbook brand. Disney and ESPN are sort of toying with getting involved. How will the broadcast networks integrate sports betting into their broadcasts and into their content? How will people like Comcast integrate it into their user experience that you get when you go to like the sports interface? Again, people like fanatics who are just not in the sports betting game but want to use it as a way to drive the rest of their business and to drive engagement with consumers to just make themselves a bigger brand. I think that's going to be really interesting.
Yeah, totally. All right. So we close our episodes with a segment called Trend or Fad. It's kind of our speed round. I'll try to surprise you with a few different concepts. You ready to try a few?
This is where I'll get in trouble, but sure.
So NFTs, trend or fad?
Fad.
Designer crossbreed dogs, trend or fad?
Well, I have a golden doodle, which I don't know if that counts or not, but I'm going to say trend.
Renting clothes, trend or fad?
Fad.
Coming out of retirement, trend or fad?
Trend.
And then finally, VR casinos, trend or fad?
Short-term fad, long-term trend.
Cool. Well, this is great. See, that wasn't so bad.
No, that was good.
David, thanks very much for appearing on the show and sharing your insights. What's the best way for people to read more of your research and follow what you guys are doing?
Just follow us. Our website is americangaming.org. Then you can follow or find us on both American Gaming and myself on Twitter.
Sounds good. David, thanks again.
Great. Thanks for having me on.
And thank you for tuning in to another episode of Trends with Benefits.